Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, October 24th, and last night I did not make a video. I had completely lost my voice yesterday, and I'm sure you'll hear today how scratchy it still is, but I was completely not able to speak last night. So last night I didn't make a video, but these charts were out on TradingView, so hopefully you did find them there. This was the setup, and in SPY, we did close the day before right here, and we opened today with a gap up. We took it right to the 35 EMA, and that is where we saw resistance. We dropped down and took it to the 30-minute 200 moving average, and that is where we bounced back up. And then the 35 EMA stayed resistance for the entire day. So 35 EMA, 30-minute 200 moving average, that is where we traded the entire day in between. And SPX, the 30-minute 200 moving average in SPX did not catch quite as cleanly over here, but we had a very similar trading day. We opened with a gap up right to the 35 EMA, and then here we actually dropped underneath the 30-minute 200 moving average. We closed that gap and we traded right between that closed gap and the 35 EMA. Once that gap was closed, we brought it all the way back up to the 35 EMA. This right here is a huge level to watch tomorrow. We have that 30-minute 200 moving average, and that 35 EMA looks like it might want to cross down. If it does, we will be bearish. If we see a bounce here tomorrow and a shift of momentum back to the upside, then we will still be bullish. But as of right now, it is a very close call right here. Definitely keep an eye on this level. It's actually a pretty cool phenomenon to watch though. So when you see that price come down underneath and you still have the 35 EMA above the 30-minute 200 moving average, you can usually expect a move back up, because as long as this 35 EMA is above the 30-minute 200 moving average, we are bullish. So SPY did close up 0.22%, SPX closed up 0.21%, VIX came down 0.94%, and we did trade completely within the implied move today. And then taking it over to QQQ, we did open with a big gap up back above the 30-minute 200 moving average and to the 35 EMA. And you could see we had that sharp momentum down, and then right at the 30-minute 200 moving average, we flipped around. So after that big drop down yesterday, and if you read the TradingView chart that I posted, this level right here, the 1 hour 200 moving average, was also lined right up with the implied move for the entire week. So you could see that right here. I'm going to make it darker right there. That was the bottom of the implied move on the week, 486, and that 1 hour 200 moving average brought us back up. And then today we gapped back up to the 30-minute 200 moving average. We actually gapped up to the 35 EMA, dropped to the 30-minute 200 moving average, took it to the top of the implied move, and actually the top of the implied move was wider than the 30-day average, so we actually got right up to that 30-day average, and that is where we closed, just a little bit under. So QQQ up 0.81%, VXN closed down 1.96%, and we did stay completely within the implied move here. So if you took something like a 494, 495 bear call spread when we got to the top of the trading range here, that would have paid 100%. And let me know in the comments if you guys think I should make a masterclass on bear call spreads, bull put spreads, and how to trade them, what orders to use, where to take profits, stuff like that. I've been thinking about making one. I would have to sit down and see how to present the material, but if you guys are interested, let me know. That might push me to do something a little bit faster. All right, so that was QQQ. IWM, we did have a really interesting day over here, and in the chart last night when I posted it on TradingView, I drew attention to this level up here, the 30-minute 200 moving average, the 1 hour 200 moving average, the bear gap right above all of that, and the 35 EMA. So we did see a bearish cross down of the 35 EMA here. This is a good example of what I was just talking about could happen in SPY and SPX. So right here, that 35 EMA crossed down, and you could see it stayed as resistance. This makes us bearish here. So if we do pop up to that 30-minute 200 moving average, expect to see it as a resistance. But look at how many levels we had to the upside blocking us. We did gap up, and we took it right to the 35 EMA. That 30-minute 200 moving average was there, that down gap, and then the 1 hour was just underneath it, and we lost all of it. Came back down, closed this gap from the morning, and then took a swing back up, but still saw that 35 EMA as resistance. Couldn't get over that. Pretty easy day, honestly, today if you knew this was here. And IWM did close up 0.22%. VX closed down 0.23%, and we did trade completely within the implied move here. And really quickly before we move on, the bottom of the implied move on the week is 221 right here, and we are so close to that, making me think we might see a day update tomorrow to at least close within that implied move on the week. All right, and then lastly, DIA. DIA also saw a bearish cross down today. The 35 EMA crossed underneath the 30-minute 200 moving average. So we are bearish in the Dow and in IWM, and DIA opened with a gap down, took it down to the 1 hour 200 moving average, but lost it right away and dropped down. We did see a bounce back up. We were very oversold here. I'm not sure if there was a level there that we bounced on. Yeah, honestly, back here there was quite a bit of support right here, and previously resistance. So that's another level that I did not have in there. But yeah, we did bounce right there, took it back to the 1 hour 200 moving average, and did not get above that. So DIA this week broke underneath a support right here at 427, and once we lost it, we just dropped, filled that gap from PPI earlier in the month, and then you could see once we bounced on that 1 hour 200 moving average, this was yesterday, then today we gapped back down, and this gap lines right up with PPI inflation data. So really interesting breakdown for DIA, completely outside of the implied move for the week, and we flipped bearish over here. DIA, the only red one today, down 0.32%, and we did stay within the implied move on the day. However, we are very far away from the implied move on the week, which could cause some added volatility as we close the week. All right, guys, my voice sounds absolutely horrible, but let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and if you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. There's no such thing as a dumb comment, so ask away down below. And if something I said on my channel led you to take a really profitable trade and you want to say thank you, there's a button underneath that says thanks, and that goes directly to supporting me and my channel. And feel free to share these videos with other traders who might benefit from this content. Alright, so starting in SPY, tomorrow's implied move is between 575 and 583, and that is from options. The 30-day average volatility is the same on the downside, 575, and $1 wider to the upside, 584, and on Monday's contract, 574 to 585. And to the upside, the first level to look for is going to be this 35 EMA. We have seen this level as resistance all week, even though we did get a little bit above it at the beginning of the week, but we had a hard time holding above that level. Then Wednesday we gapped down, and we've seen that 35 EMA as resistance. Now, because we are this close to the 30-minute 200 moving average, this does have the potential to be a support here, in which case the 35 EMA would start to curl up and start acting as support. And if that happens, then the next level to look for is going to be this down gap from Wednesday. The top of the implied move on the day is within that gap, 583, and the top of that gap is 583 and a quarter. And then the top of the implied move on Monday's contract is 585, and we have seen a bit of resistance going back at that level in the past few weeks, going back here, and then we did see a pop up here, but afterwards we resumed seeing 485 as resistance. 585. And then to the downside, 30-minute 200 moving average. The big thing we want to watch tomorrow is to see if this 35 EMA stays above the 30-minute 200 moving average, or if it crosses below. If it crosses below, we are bearish. Right here, we did have a huge drop, but we're still bullish with the moving averages. That would change if we dropped underneath. Then underneath that, 578 is the bottom of the implied move for the whole week. That was the number we got here at the beginning of the week. So 578 for that. 575 is the bottom of the implied move on tomorrow's contract, and that lines up right here where we did see support on that massive drop on Wednesday. And then just underneath all of that, we have the 1 hour 200 moving average. Both the 30 and the 1 hour are still pointing up. And I remember saying, if we drop down to the 30-minute 200 moving average, we're not going to come crashing through it. And we did come underneath it, but we got pulled right back up. When the momentum is up, we're going to get pulled up. It doesn't mean we have to be bullish, doesn't mean we have to V all the way up here, but we're not going to come down until this turns. And that could happen another day around this level, and that could turn, and then we could start trading down to towards the 1 hour. And then underneath that, 574 is the bottom of the implied move on Monday's contract. All right, and then taking it over to SPX. The implied move for tomorrow is between 57.70 and 58.45, and that is from options. The 30-day average volatility is just a little bit wider, 57.65 to 58.50, and on Monday's contract, 57.60 to 58.60. And right here in the middle, we have that 30-minute 200 moving average and 35 EMA. In SPX, they are much closer. Just a small down move here, and we close the week bearish. But if we do get above that, if this 35 EMA starts to curl up and turn into support, which does happen sometimes around the 30-minute 200 moving average, then the next level to look for is going to be this down gap from Wednesday. The top of the implied move is within that, 58.45, and then the top of that gap is at 58.50. 58.60 on Monday's contract, and then to the downside, 5800 is the bottom of the implied move for the week. We saw that starting on the weekend episode, and then underneath that, 57.70 is the bottom of the implied move on tomorrow's contract. That lines right up with support right here, and then 57.60 on Monday's contract, with that 1 hour 200 moving average running along the bottom. So pick your strikes over there. And QQQ, the implied move over here for tomorrow is between 488 and 497. That is from options. The 30-day average is just a little bit wider, but it still rounds out to the same numbers. And then on Monday's contract, 486 to 498. To the upside, we have this down gap from Wednesday. The top of that gap, which would be our first true resistance, is 496. And we have seen 496 as a resistance for the past few weeks. 497 is the top of the implied move. 498 is the top of the implied move on Monday's contract. And then to the downside, we have the 35 EMA and the 30-minute 200 moving average. It's already starting to curl up. So this does have the potential of turning and staying bullish. But if we see a drop tomorrow, we're not very far away from dipping underneath this 30-minute 200 moving average. So it's like a delicate operation here to get this to stay bullish. And then if this does break, then the next level to look for is this bull gap. The bottom of that gap is 488. Bottom of the implied move is 488 as well. This is 488.36. Bottom of the implied move 488. And 486 on Monday's contract, and that also lines up with support right here. Bottom of this gap right here lines up with this support back here. And even though we did break this with this one, it's not going to be as strong. We still did see some action at this level. So bottom of that gap could be support if we drop, especially since it's also the bottom of the implied move. Then we have the 1 hour 200 moving average underneath that. And then I think I already said 486 on Monday's contract. Not too far away from the 50-day moving average. Oh, I'm losing my voice. Let's see if I can get through this. All right, IWM. The implied move for tomorrow is between 217 and 223, and that is from options. The 30-day average is the same, and 216 to 224 on Monday's contract. And to the upside, we see the same resistance levels we saw today, which is that 1 hour 200 moving average, the 30-minute 200 moving average, that down gap from Wednesday, and we also have that 35 EMA. Now, because we had this bearish cross down here, this 30-minute 200 moving average more than likely will be a resistance level if we do start trading up. But if not, if we break above this, we do have another down gap here. This is from Tuesday. And then at the top of the trading range, this is 223. That is the top of the implied move. And 224 on Monday's contract. To the downside, we do have a small support right here at 218. 217 is the bottom of the implied move with the 50-day moving average. That's a big level just underneath that. 216 on Monday's contract, and because of that 50-day moving average right here, 217, 216 does look like an attractive bull put spread on the day if we do drop, maybe even on Monday's contract as well. And lastly, DIA. Now this is really wild because we have tomorrow's implied move completely disconnected from the weekly. That is extremely bearish, and that shows right here with that bearish cross down. And the implied move for tomorrow is between 421 and 426, and that is from options. And to the upside, we do have that 1 hour 200 moving average that's really more right in the middle. That is right where we closed. And then above that, we have that down gap. Now this down gap's really significant because it lines right up with PPI. I can't, my voice. This is why I didn't want to record yesterday. All right, and then 35 EMA is right there, cutting through that down gap as well. And then above that, the top of the implied move is 426, and that 30-minute 200 moving average, which is now going to be resistance because of that 35 EMA coming down, is at the top of the trading range. And then to the downside, 421 is the bottom of the implied move. All right, guys, I have officially completely lost my voice, and thankfully I have the whole weekend to recover it. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys on Sunday night. Have a great weekend.